Well, I want to do a talk this afternoon. It's very important. The subject I'm going to talk about is bond prices and bond yields. Now, going back into the 70s, into the late 70s, early 80s was the last time we had high yields. And yields spiked in the 10-year. They spiked over 15%. But they didn't last that high very long. They came back down to a spot around 12%, and then they started to fall. Yields started to fall, and they fell all through the 1980s, all through the 1990s, all through the 2000s, all the way up to 2000, and they've been falling all the way down to the year 2000 and roughly 2017, I guess. 2016, they were at their lowest point, and here's the thing. For you people who have put your retirement savings away, for people who have been investing money and so on, you've always seen falling yields all your lifetime during your entire financial history. Everything that we're used to, people who have been, say somebody who was born in the mid 1980s, or born around 1990, and I mean this, a lot of people are of that age. They haven't seen these really high yields. They've only ever seen falling yields the whole time they've been alive. What's happening right now is the U.S. 10-year is up to 3.115. It's been going up today. You might say to yourself, well, why is this important? Why is rising yields important? I'm going to explain to you why right now in a nutshell. I'm going to get to it. And why I'm giving this talk right now is because of what the system has done by expanding credit. Now, this is very serious, what I'm going to say right now. And it's worth bearing and listening to. Because of what the system has done by expanding credit, high yields cannot be sustained and cannot be tolerated by the financial system. This is creating an intolerable situation, these rising yields. They're not going to go much further. Now, if you watch my show, Financial Turmoil Explained, I started that channel because I saw this situation coming. I saw this situation coming back before I even first started the channel. I started the channel and I didn't really put any programs on it for a few months. And I named the channel very specifically Financial Turmoil. Turmoil is like tumultuous. It's like a word that means agitated. That means like if you looked at a sea that's full of turmoil, it would be a sea that had all kinds of choppy water in it and waves, and a sea during a hurricane, during a storm. That would be a tumultuous sea, a sea that's full of turmoil in the water. The thing is that's what's coming to the financial system, and that's why I specifically named my channel Financial Turmoil. And I wanted to explain it to the people when they wake up to the situation one day where the whole world's crashing down around them, and they suddenly stop looking at these videos like epic fails, where people are falling on their head or whatever, silly stuff, people falling down and breaking their bones and stuff, stuff like that on the internet. When they stop looking at stuff like that, they wake up and they see all of everything that they've worked for their entire life disappearing right out from underneath their eye, right out from underneath their feet. And they want to know. They're going to want to know, why is this happening? How is this happening? I'm on here telling you right now it's getting ready to start. We're seeing these yields rise in the treasuries. This is the bond market crashing. These rates cannot be tolerated within the system. Soon the equity markets are going to start to roll over. Soon the U.S. Dow Jones, which is the biggest, most powerful market on earth, is going to fall. Now, what's going to happen when the Dow Jones first starts to really fall? The real fall is going to come when the Dow Jones breaks through support at 23,000 and starts to fall like a stone down below that support line of 23,000. Suddenly, when it drops down below 20,000, fear is going to enter into the market. They're going to realize that, hey, you know what? Something's really wrong here. We're losing too much of this market. When that fear enters the market, very unusual things are going to happen. First, it's just like a person when they start to get too cold. What happens when a person starts to go into hypothermia is the outer limbs the body starts to haul the blood into the center, to the core, to try to keep the person from dying. And the circulation to the outer limbs starts to cut off, to the periphery starts to cut off. This is exactly what's going to happen to the system. The system's going to start to withdraw. People are going to start to withdraw, and they're going to want to go to what they consider safe zones, especially investors. Investors will drop all. They'll drop speculative investments at that particular point. And that's when the fear is going to enter in at 20,000 on the Dow Jones. But it's not going to stop at 20,000. It's going to continue to fall, which is going to accelerate the fear. Where people are going to turn at that particular moment is they're going to drop the cryptocurrencies. They're going to drop the exchange-traded funds. They're going to start to try to profit take, even if they're profit taking at a loss. This is going to accelerate the crash. People are going to start liquidating assets, quite literally, at that point. This is going to accelerate the crash. This is going to be the biggest crash of your lifetime. Only your grandparents or great-grandparents experience something that's going to be equal this. This is going to be, I'm not going to call it magnificent, but it's going to be a crash like none other, nothing else you've ever experienced. And there's going to be tremendous liquidations. Now, people are going to haul in, and they're going to go to three things. They're going to go to the dollar. Believe it or not, they're going to go to the dollar. They're going to turn to the dollar because it's a touchstone. Why they're going to turn to the dollar is, for ages now, the dollar has been a place to, as a safe haven to hold your asset, your bank accounts in dollars. Everything's been in dollars, so they think dollars. Their mind is hardwired dollars. They think liquidity. They instantly think, hey, you know what? I got to be in dollars. I got to be in liquidity. And so by instinct, that's one of the directions that they're going to move. That's a wrong direction. The next place they're going to move is gold and then silver. But there's a problem here. There's enough gold to go around. We're not going to run out of physical gold. Right? But there's not enough silver to go around. When coin and bar demand increase exponentially in the silver market has been drawn down now to the point where it cannot not support an exponential increase in bar and coin demand. It will cause a situation where there's a actual physical bar shortage of the 1,000-ounce bars. Physical 1,000-ounce bars. There will be a bar shortage. And this is what I'm expecting during the crisis, is a bar shortage of physical silver. What's going to happen then is the price is going to exponentially take off, more so on silver than gold. Gold, the price is going to take off, but silver is going to be phenomenal, absolutely phenomenal. And these are the three places that they're going to run to during the crisis. Now, what's going to happen is the dollar's actually going to go up. During the crisis, I'm expecting the dollar to peak higher than 96. Now, I'm not exactly sure how it's going to go, but how high it's going to go, but I'm expecting it to go higher than 96 on the US dollar index. Now, gold and silver will be unlimited how high they're going to go, and I'll explain to you why. And the cryptocurrencies, I'm expecting them to start to have a sell-off when the market goes below 20,000. But it's not going to last long, because when that market is in that free fall, and I'm going to call it a free fall, what's going to happen is when it starts to fall down like thousands of points a day, they are going to close the market. They're going to shut it down. And they're going to do just like they did in China. They shut the markets down in China when the market went into a complete free fall. So when the market goes too much below 20,000, maybe 18,000, 17,000, somewhere in there, they're going to shut the Dow Jones down. They're going to shut down the S&P 500. They're going to shut it all down, all the markets down. This is only going to create more panic. This is when they're going to convene with their meetings, emergency meetings, when the markets are shut down. This is going to be a freeze situation. They're going to freeze all credit. This is when you're not going to be able to get money out of the bank during this period of time when this happens, because they're going to want to, they're going to freeze everything, basically. They're going to convene with special meetings. Now, when they come out of these special meetings, they are going to set a new policy, which is going to be, the Fed is going to change from a hawkish stance to a dovish stance, and they're going to open up the floodgates of money. What I mean by that is and the initial reaction is to reinstate quantitative easing, but bigger and better, to offer support to the banks. Any banks who are in critical condition, they're going to offer support to them, to the banking system. They're going to come out and they're going to do an awful lot of promises. Now, after they reconvene these meetings, they're going to open the markets back up, and then the initial move of the markets is going to be spectacular. Up. They're going to go back up again, the markets. Now, what's going to happen too at this exact same point in time is that's when cryptocurrency is going to turn. People are going to run back to cryptocurrencies again. Huge. It's going to be huge. And gold and silver, they're going to run into them even bigger than they were on the downside. They're going to take off too. But at that very moment, the dollar is going to start to die. If the dollar went up to, say, remember I gave you that marker, 96, it could possibly go quite a bit higher. When they first announce what they're going to do, new quantitative easing programs and everything else, and that they're going to stop their quantitative tightening, and that they're going to do this and do that, and all these promises to support the banks, promises to print unlimited money, immediately, within the first day, probably the dollar is going to lose at least 1% on the dollar index. And it's going to continue to drop and drop and drop. It's going to be in the 90s and in the 80s and then the 70s. When it drops below 70 on the dollar index, that's when we're going to see the dollar crash. So now you basically got a roadmap. I've laid out this roadmap before. We're following it, and so far it's been working out very much exactly as I laid it out months ago. It's following almost exactly. There's only one thing is, when I first laid it out, I thought that the markets would fall a little bit faster, and I thought that the bond rates would climb a little bit faster than they have. I expected that to hit 3.25 a little bit quicker, and it's taken a little bit longer, but so far we're still right on course for this to play itself out. Listen, so this show I just give you is a warning. Get your financial house in order. If you like, now this is not financial advice. I'm not a financial investment advisor or anything like that. But if you like something that has quite limited downside risk and very high upside potential, think physical silver. This would be my highest recommendation if I was a financial advisor, which I am not. So do not take my recommendation. Second thing I would say is wait for it, because cryptocurrency is probably going to be the bargain of a lifetime when it hits rock bottom. But it's risky. Cryptocurrency's always been risky, always will be risky. But there's an awful lot of potential money to be made in cryptocurrency. The stock market's going to do good after the crash if you can get in before it goes back up to the moon. I mean, if you can get in time, it might climb awfully fast when this thing's over. There's going to be an awful lot of opportunities. But one of the biggest things is that I want to point out in all of this is, if you've been saving all of your life right now, and you've got all your money tied up in the bank in dollars right now, honest to gosh, I truly believe that in the next 5 years you're going to get slaughtered. And your dollars are going to lose most, if not nearly all, of their buying power. And this would be an absolute tragedy if you've worked all of your life to accumulate dollars in the bank and in the banking system. So listen, thank you guys for listening. Like and subscribe, and we'll catch you in the next show.
Well,
Bye.
listen, guys, you watch this show on bond yields, and you got a bit of time to do preparations. You have to understand something. That when this thing is at its worst, this is going to be a crisis. I think it's going to be not unlike the crisis that occurred to our grandfathers or our great-grandfathers back during what was called the Great Depression of the United States. And you might not be able to get a lot of things that you're able to get freely and easily now, like things like toilet paper, for instance, things like bottled water. This could be quite rough. Police service might be cut back or diminished. The military might have to aid in policing because of riots. There might be curfews. You need to quite seriously prepare for this thing. And the best way to prepare for it is $5 cash, $5 bills are very good. Not bigger denomination, and ones are too small. 20s are too large. 5s are just right. You put away a few 5s for yourselves. I personally, now this is not financial advice, but I think that physical silver is nice to have at least a little bit. I say that with a gleam in my eye because it has very little downside risk and tremendous upside potential. Gold not so much so, but if you want to bug out, gold is probably the best for bugging out with because it takes up very little space. Silver is much more bulky than gold. But you probably won't need to bug out. Let's hope anyway. If you need to bug out, your gold probably won't really help you anyway if you really need to bug out. But I don't think we're going to need that. I don't think bugging out and what the real survival skills are going to be needed, because I think law and order is going to be maintained through this situation, even though this situation is going to be rather harsh. It's going to be something similar to two countries I'm going to name right now. One is Cyprus, and the other country is Venezuela. Law and order has been maintained in Venezuela, and law and order was maintained in Cyprus during the situation that they had, but they had big long lineups to get cash. Many people were running into the bank trying to get cash out during the crisis in Cyprus. So listen. This is basically a warning because the bond market is, why I'm giving this warning is, first off, I am not sure that it's going to make 3.25%. It could roll over tomorrow morning, to be quite honest with you. Now that the bond market's going up this fast, it could roll the stock market over sooner than I thought. Or, once we get to 3.25%, I'm said that that's the mark where it's ready. It could take a little bit longer. But the stock market is going to roll over, and this is going to be the beginning of the troubles. And the troubles are going to start really fast. And this is the way it was in 1929. When it finally really got rolling, it hit fast. And that's the way with this. It unwinds. When it finally starts to really unwind, it unwinds really fast. And you don't have a chance to go out there and get your toilet paper or get your bottled water or get your $5 bills or get your little supply of silver stuffed away in a sock for yourself or whatever. You just don't have a chance to get that if you've waited too long. And you might be really sorry later. you know this is the time to make your preparations and get ready. And also at the same time you have to realize that an awful lot of people who are all in dollars, and maybe they've saved an awful lot of dollars, a million times zero is still zero. So if the dollar goes back to its intrinsic value, which is zero, it doesn't matter whether you've got 100,000 in the bank or you've got 10 million in the bank. A zero times zero is still zero. Okay, thank you guys for listening. Bye bye, and soon the weekend's coming, and time for barbecues again. Bye bye for now.